Commodities continue to rip. It's kind of crazy to, excuse me. It's kind of crazy to see the way the markets continue to move this whole time. I'm very interested in continuing to stick to these trends. I know that it gets boring. I continue to say the same thing over and over again. It's boring to continue to be long all these things and sit around patiently in an uptrend. Like, but that's the way you make money. The way you make money is so counterintuitive to the way you think about making money as a trader. When you first start trading, you go, okay, well, to make money, I buy things, I sell things. So when it rips, I sell it, and then I buy something low. You just don't know when something ends. So, and once again, it's not that this always works all the time or 100% of the time when I do this, it's the best trade ever. It's when the market is moving and you diversify across these different asset classes, you can always find these major runs in the markets, whether it's from commodities to equities to sectors, whatever it is, you can find these runs. And starting off, I'll let you guys go through that Plato's Allegory of the Cave. I'm very excited about that. That's one of my favorite things to kind of look at. I don't know if you guys ever read into it or learned about it. It's super cool. I know you guys see all the philosophy stuff I've been posting lately. That was actually my major at one point, but I am very interested in it. I think it's very applicable to trading, and it can make. I think the most important thing is looking at the markets from a different perspective, and maybe this can help people look at it through a different perspective. Because I know that for me, I had to really understand these concepts in a new way to help me to learn. And what's the reason why I wanted to do this audio note was because things like the ECB, like and the Fed. I wanted to talk about this because I continued to kind of be on this like, hey, I don't know if the Fed is exactly going to cut rates here. But once again, it's like anything can happen, right? So as the market's trading, I'm not going to sit there and go, this has to happen or this has to happen. The market continues to crash here. Let's say we get a 10% correction. Everybody's going, oh my God, it's the end of the world. I could see these rate cuts start to happen. But if we just continue to rip, especially if we're in the market environment we're in, where energy is the only sector really leading the way and commodities are leading, why in the world are they going to come and cut rates? I'm just saying the main point is that they're very slow to cut and they're very quick to raise. So, because of those reasons, I'd be more on the side of the fact that we might be higher for longer, a little bit longer. I still think they're going to cut at some point. I just think we have to see some form of catalyst to make this happen. Now, once again, this is prediction. I'm not trying to predict. I'm trying to just talk about the markets, and just what I've learned historically. So when people are going, well, this has to happen and this has to happen, it doesn't matter. The price action is telling us what's happening. Commodities are ripping. This is where we want to be. The reflationary sectors. That's where we want to be. We're getting closer and closer to a sell signal in our. We use a long term and an intermediate term on our ETF and our futures portfolio. So we're still long these positions, even in tech at the moment. So there are no sell signals, but we're kind of getting closer to some. Now, once again, the portfolio is still gaining. Why? Because we've been taking not sell signals, buy signals in these other markets. And as we're looking in these other areas and finding these other markets to be long, we're going, okay, well, we can be in these areas. These will give us the outperformance that we're looking for. And we'll continue to go there while we have these positions that might be struggling a little bit until we get a sell signal. That's really the key to my success. People go, how do you trade so many things? It's like I trade many different things that are not entirely correlated. That's the main point of my portfolio. How do I find things that aren't correlated? That's the first thing you should ask yourself. And then once you figure that out, I think the easiest way for me is to go through these different markets, bonds, commodities, um, currencies, crypto, and so on. That's going to be my easiest way of figuring out all these uncorrelated assets. And so I can figure out the things that are going to move up as the market's possibly moving down, and we're still making money here. That's important. So looking at yields, yields, yes, they're still very high, and yes, they continue to rip. Most of the time, you'll see these hints in the 2-year yield or the 5-year yield, like that they're going to start cutting rates. We're just not there yet. We're not to the point where I'd say, okay, here's the hints coming, the 2 years crashing. It's just not happening yet. Um, I'm not exactly saying, hey, these yields are going to go up forever. I'm not saying, hey, they're going to come down right here. I'm just saying I'd expect more chop in the yields before anything happens. The yield curve is still inverted. It's trying to come out of inversion, but it's not near it yet. So, we're still in the same market environment. Really, economically, it's stagflation. But market-wise, we're at reflation. So you have to understand there's two different worlds out there. There's a world of what we're trading in the markets, and then there's the real world that we're living in. Real world is obviously in stagflation. You live it, you see it, it's stagflationary, meaning inflation, no growth, no jobs, no nothing. But they're telling us something different in the market. So once again, we have to learn to trade what's in front of us, and that's all we can do. Tech heavy S&P gave a short-term bearish signal. It's another thing I talked about today. Yes, we are in a bearish signal. I think anybody could see that. However, we don't trade that, but just putting that out there for you guys in case you want to wait. At the moment, if you're a short-term trader, I would wait for a buy signal to come back in. I will update my subscribers on that. This is the free report, so everybody sees this, but if you're not a subscriber, you probably won't see the buy signal that I'll put back in, or the add signal. Silver to gold ratio is starting to move up. Really great ratio to use. We want to see silver as the outperformer. When silver's outperforming, we can then know the market is in a good spot to continue to move higher in the precious metal space. At the moment, silver to gold ratio is just telling us that, hey, we are starting to see some outperformance in silver, and the gold miners are starting to look good. However, we need to see that continue to follow through. Let's get over those 2023 highs. Once again, we're long silver, we're long gold. I'm very happy being long all those sectors, all those commodities, as well as the sector of gold miners. Copper's moving nicely. Next resistance is at the 2023 highs. So we're moving in all of these areas right now. I don't know how anybody can say, hey, I saw somebody today say, see, stupid, inflation's coming back down. I don't know what they were referring to, but like if you're actually trading the actual market, they were talking about PPI, I think. If you're actually trading the actual market, you see that inflation is not coming down. It is only moving up. So look at our portfolio. Our portfolio is doing great. Why? Well, it's because inflation's moving up. And the underlying commodities that drive inflation are moving up. Simple to see. This is why we use the price action. Large cap tech continues to lead against small caps. Yes, there's some times where I think something to think about here. We're looking at things like, okay, small cap tech is leading. How do we look at that? Small caps are lagging, large caps are leading. We're looking at these strong companies that are doing very well, leading the way. The ones that might struggle in any type of market environment in the real world, like we're talking about today, the stagflationary environment where there's a lot of inflation putting pressure on their goods and services, they're gonna struggle. So the large cap area is obviously outperforming. It's continuing to outperform. We're long both at the moment. Small caps haven't really made us money, but it hasn't lost money. So we'll see where that ends up. Besides this week, the market is trading in a reflationary posture. We're still seeing a reflationary posture this week. We saw a bit of a defensive rotation. I'm not worried about this week. I don't try to trade in the very short term. I don't feel like I have an edge doing that. So looking at it still, we're still long energy. We're still long industrials. Still long technology. Still long some other stuff. Steel miners, gold miners, all of these countries that are commodity producing. Basically, we're long the reflation trade. So if you look at the portfolios going back to Wednesday, you can see all the positions we have on. We're still seeing a nice run there. Industrial metals, precious metals, and energy continue to outperform. Great run here from all those areas. Very strong moves. Let's see where those end up. And then gold. Finally, gold. I'm here to just tell you once again, there's no fever like gold fever. And there's a funny saying, and it's from Richard Russell, great writer, wrote the Dow Theory papers, letters actually. And what he wrote is the Fed will always be in between a rock and a hard place, basically, and they'll have a choice, and it's inflate or die. And right now, it's if they do cut rates, it's them choosing to inflate or die. So that's really what we need to see here. That's a thing that is the case for the Fed cutting rates. Really, is that they don't give a shit and they have to inflate or die because the debt levels are too high and they just have to do it. That's really the case for the Fed. All right, guys. I'm a little overly excited about talking about the markets today, like usual. So I'll let you guys go. Hope you guys have a good weekend, and we'll see you next week. I'm glad everybody's doing well, making a lot of money. Remember, we have shows, Kevin Green and I, on Monday. So we'll be live on Monday at noon. We have a fun show planned for you guys on Monday. Every week we have a show on Wednesday. It moved from 2 p.m. to 4. Now we're been doing it at 4 p.m. on Wednesday, so we'll see how that goes. All right, guys, take it easy. We'll talk soon.